Hello and welcome. Today we're going to work on some basic financial statements. Now we're working on Intermediate Accounting Chapter 3, but this would work for financial accounting or principles of accounting. Hello, my name is Jeff and I help you finally learn financial literacy, so accounting and finance and some Excel. So today I'm going to use Excel, so that's one of the skills that you need to know how to do if you're going to be in the financial world. All right, let's get started. We've got 4 problems today, and we're going to first prepare financial statements for a company just with a little paragraph. So this is one of the basic, simplest little things we can do. All right, Roger mows lawns. He begins his business in 2020 and has the following transactions. He borrows $7,000 from the bank. He buys a mower at a cost of $2,000. He pays cash for that mower. He mows 100 lawns. The total fee of $9,000 for all those 100 yards, collecting 80% in cash. The balance is going to be paid in 30 days. And he pays operating cost totaling $3,000. So we're going to ignore depreciation and taxes. So we have a couple of questions. What's the profit for the year? Well, the profit for the year is going to be, we're going to have to calculate the income statement and prepare that. How much cash is in the bank? Well, we're going to have to figure that out. We can look at the balance of cash, and we'll do this here in just a minute. And then the 3 major financial statements as of December 31st. So this is just a few sentences. Can we calculate the transactions and record the transactions and calculate then the financial statements? All right, so let's kind of scroll down. And I've set up the accounts and the T accounts. Remember, cash is an asset that's going to have a debit balance. Debits will increase. So cash, accounts receivable, equipment looks like our assets. Notes payable is our liability. Service revenue is a revenue account. And we're going to put everything into the operating expenses category. Well, let's just do this line by line. He borrows $7,000 from the bank. So we're going to debit cash $7,000. So I'm not doing a formal journal entry. I'm just using the T accounts, but it's going to be the same thing. The journal entry would be debit cash and credit notes payable. So $7,000 here. So debit cash, credit notes payable, $7,000. Okay, that knocks out that first sentence. He buys a mower at a cost of $2,000. We're going to call that equipment. So equipment goes up $2,000. His cash goes down $2,000, so we need to debit equipment and credit cash. This shows that equipment is increasing, and this shows that cash is decreasing. Now, he mows 100 lawns, and the total fees are $9,000. So he sends a bill to all those 100 homeowners, and the total fees are $9,000, and he's collected 80% cash so far. So what do we do? So let's set up an accounts receivable for the balance of the 20%. So the accounts receivable is going to be the 9,000 times the remaining 20%. So his accounts receivable is $1,800. Okay. The service revenue is going to be the full 9,000. And then how much cash did he collect? Well, it's going to be the 9,000 times the 80%. So that's $7,200. Now, if we wanted to make this as a traditional journal entry, we would say cash, we would say accounts receivable, and we'd credit something like service revenue. That's our account title here. So we know our revenue is the full 9,000. And we collected cash of $7,200, and our accounts receivable is $1,800. Now, you should be really good shape at this point, good shape on doing journal entries, but that's the journal entry for that transaction there. All right, he mows 100 yards, collects fees of $9,000, 80% is collected on the fees of $9,000. All right, then the last thing we have is we have operating cost of $3,000. So this is all paid in cash. So cash goes down $3,000, and our operating expenses go up $3,000. So we have, instead of doing traditional journal entries, we just started with the accounts and put the debits and credits in the account so we can figure out the balance of each account. So one of the first questions we have is, what's the balance of cash? Well, we're going to start with 7,000 plus the 7,200 minus the 2,000 and then minus the 3,000. So that's 9,200 is the balance of cash. Everything else just has one entry, and so obviously the balance of accounts receivable is that 1,800. The balance of notes payable is the 7,000. So how much cash does Roger have in the bank at the end of the year, end of the summer, is 9,200, which is great. All right, so we need to do the profit and figure out the financial statements. So what I've done, I've just built these financial statements just to be a little bit quicker. So our income statement, we're going to start with what? What is an income statement? The income statement is going to be service revenue minus any operating expenses. What's the balance of service revenue? Our service revenue is 9,000. I'm just going to type that in. I have this pre-formatted for commas and dollar signs. Our operating expenses are 3,000. So we have 9,000 minus the 3,000. So we're talking about 6,000. Is that going to be net income or net loss? Well, it's net income because revenues are greater than the expenses. $6,000 net income. All right, so the answer to the question is, what is the profit for the year? It is $6,000. Now let's think about his lawn care company retained earnings. Retained earnings, this is the very first year of operation, so we start with 0. We're going to add the 6,000. Now we could have dividends. I'm calling it dividends because typically you're going to see beginning retained earnings plus net income minus dividends. This could be withdrawals. Did Roger take anything from the business? No, so that's going to be 0. So we can just say beginning retained earnings plus the 6,000 minus the dividends. So obviously it's going to be 6,000. Pretty easy, simple little problem. Now I've gone ahead and put the 3 assets here, and the 3 assets, the total, if we look at the top here, the 3 assets are cash, which is 9,200. 1,800 is our accounts receivable. Our equipment is 2,000. So our total assets, we can add all this up. That's going to be 13,000 as our total assets. And our notes payable and retained earnings should equal 13,000. Remember the balance sheet that has to balance. So our notes payable is 7,000. Our retained earnings is 9,000. Our retained earnings, is 6,000. We just calculated it. So if we add this up, we should have 13,000. So these total, the total accounting equation is assets have to equal liabilities plus equity. So the total assets are 13,000 and the liabilities and equity is 13,000. Okay, so we're in good shape on that problem. Let's continue. Let's do a problem where we're given, this is essentially a trial balance without the debits and credits, and so part of this is you need to know what type of account it is and the balance. It doesn't really matter right now if it's a debit or credit balance because we know the normal balance. So for example, cash is an asset that has a normal debit balance. And so we have all the accounts with all the balances, and we need to do our 3 financial statements. All right, so what I've done is the first thing we're going to do is our income statement. We need to go through and find our revenues and our expenses. So fees earned is another way to say service revenue. So that is going to be 85,000. So I'm just going to, I can point to these, 85,000. Our wages expense is 23,000. Our travel expense is going to be 3,000, and our rent expense, let's do rent expense first, is 6,000. and our travel expense is $3,000. I think I did that correctly. So we're going to take the fees earned, which is a revenue account, minus $23,000 minus $6,000 minus $3,000. So our net income in this case is $53,000. All right, on the retained earnings portion, we need beginning retained earnings. Now, this company has beginning retained earnings. So we're going to take the $55,000 and drop it here. I'm going to point to it. Now, do we know net income? We know net income is $53,000. So we had $55,000 beginning retained earnings. Net income is $53,000. Now, do we have any dividends? Dividends paid is $2,000. So we're going to take, and I'm going to make it a negative dividend number, and I'll show you why. It doesn't matter if you make it positive or negative here, but if we make it negative, then we can just add this up, and our total retained earnings is $106,000. Now, I've listed the assets, all the assets over here on the balance sheet, and so let's just put those numbers in. I'm just going to type these numbers in. It'll be maybe just a little bit faster, but cash is given, accounts receivable is given, inventory is given, land, building, equipment. Well, I think I can do this. I can just probably copy it down, make it just a little bit faster. So 21,000. So cash is 21,000, accounts receivable is 15,000, inventory is 10,000, land is 13,000, building is 90,000, equipment is 15,000. So what's our total assets going to be? Our total assets in this case is 164,000. We know that liabilities and equity are going to have to equal 164,000 also. All right, so let's look at the two liabilities. We have accounts payable. Accounts payable is 11,000, and our notes payable is going to be 12,000. So the total here of those two looks like it's going to be 23,000. So we have a subtotal here. The total liabilities are 23,000. Now, we're going to have the equity section, and we have common stock. So let's look for common stock. Common stock is going to be 35,000. And we're given retained earnings at the beginning. Now, why are we not using that beginning retained earnings? Well, we've just calculated retained earnings, so we're going to use the retained earnings for the end of the year, not the beginning of the year. So it's 106,000. So let's calculate the total equity. The total equity is 141,000. So we're going to add the 23,000 plus the 141. 164,000 is our total assets, and now it's our total liabilities and equity. All right, we've got the second problem knocked out. We've got two more. Now, Paula Inc. completed its first month of operations with the following account balances. We've got cash, land, common stock, additional paid-in capital. When we sell common stock for more than par, we have additional paid-in capital, and we have retained earnings. All right, so we have some beginning balances already. Now, we're going to take this and we're going to do a couple of transactions. We're taking given information and then add some transactions. So the company issued 5,000 additional common stock shares. The par is $6 per share, totals 50,000. So what entry would we make? Well, we're going to debit cash. We're going to credit common stock. So the way I do it is just indent a little bit, common stock. And we're going to indent the additional paid-in capital. I'm going to move this up just slightly. So here's our cash. How much cash did we receive? Well, it's 50,000. Well, we got to record the common stock at par. So we're going to record it 5,000 shares times $6 per share. So that has to be 30,000. So the difference is the $50,000 minus the $30,000. So our additional paid-in capital is going to be $20,000. The next one, we sold services to clients totaling $30,000, collecting 80% this year. Similar problem to what we had before. So we're going to debit cash. We're going to debit accounts receivable, and we're going to credit service revenue. Our service revenue is the $30,000. Our cash is going to be 80% of that, so 30,000 times 0.8 is 2,400, and 30,000 minus the 24 we collected, we have accounts receivable of 6,000. So we have debit cash of 24,000, we debit accounts receivable 6,000, and we have service revenue of 30,000 total. Now, next one, what if we paid wages 14,000? We're going to use an account wages expense, and we paid the wages, so therefore it's going to be cash. This is 14,000 and 14,000. All right, we have one more journal entry, and then we're going to do some adjusting entries and then build the financial statements. We incurred $3,000 of repairs expense on account. So what entry do we make? Well, repairs expense is our debit. That's $3,000. Now, did we pay cash for the repairs? We did not. We have not paid yet, so this is going to be accounts payable, which we can abbreviate it AP, right? So we have repairs expense 3,000 and accounts payable 3,000. So that's accounts payable. Now we have one adjusting entry. The year-end accrued wages are 5,000. So at the end of the year, the accrued wages are 5,000. We're going to debit wages expense and credit, not cash, but wages payable. So that's for the $5,000. Now we need to fill out the balance of each account. So let's do cash, and we'll go through this real quickly. I'm going to do the cash with you. I'll fill out the other accounts quickly, and we'll come back in just a minute after we fill out the cash balance. All right, we started with cash of $12,000 debit. So $12,000 debit is our cash, and I've already calculated using the formula here. Now what else do we do for cash? We had 50,000 and 24, so we have a debit of 50,000 and then 24,000. Those are two debits. We have a credit to cash of 14. I think that's it, maybe. Credit to cash of 14,000. All right, so our balance of cash is 72,000. I'm going to quickly put all the numbers in and skip ahead in the video, and I'll be right back. Okay, I've quickly entered all the numbers here. So accounts receivable has a $6,000 balance, land $7,000, accounts payable $3,000, wages payable $5,000, common stock is $31,000, additional paid-in capital is $28,000, retained earnings is $10,000, service revenue is $30,000, wages expense total $19,000, repair expense $3,000. All right, so what we have, we're going to just build the financial statements. We've done this a couple of times already, so let me just enter the numbers pretty quickly. So the service revenue is $30,000. The wages expense are the $19,000. The repair expense is $3,000. So we have $30,000 minus the $19,000 minus the $3,000. The net income is $8,000 in this problem. Our beginning retained earnings is $10,000. That's given to us. We're going to add the net income. Our dividends, I don't think we have any dividends. Let's check. No dividends. So we're going to make the dividend 0, and our ending retained earnings is going to be $18,000. We have a couple of assets. Cash is going to be $72,000. Our accounts receivable is $6,000, and our land is $7,000. So our total assets are going to be $85,000. Our accounts payable is $3,000. Our wages payable is $5,000. Accounts payable is $3,000. Our wages payable is $9,000. So our total liabilities are going to be $8,000. Now we get down to equity part. We have common stock. Common stock is calculated at $31,000 right here. So $31,000. Our additional paid-in capital is $28,000. Our ending retained earnings is this $18,000. Our total equity is going to be $77,000. We're going to take the total liabilities of $8,000 plus our total equity of $77,000. Our total liabilities and equity is going to be $85,000, which is what we wanted to calculate. The balance sheet balances. Okay, we got one more small little problem. So let's do this one. Let's say we want to find net income. We have some information. We have beginning and ending assets. Now, for the year 2020, the beginning would be the end of the year 2019. For 2020, the beginning assets are $8,000 and the ending assets are $21,000. We have liabilities, we have common stock, and we have retained earnings. We paid dividends during the year of $9,000. Now, there's two ways to calculate this little problem. If we know beginning retained earnings is $5,500, that's given. Right here we have the beginning and ending, $5,500 and $16,000. We know dividends paid are going to be $900. Then what is our net income? Our net income, we can just simply work our math backwards and figure out what net income is. So $5,500 plus net income minus $900 gives us $16,000. So let's work our way backwards. $16,000 plus the $9,000 minus the $5,500, and so our net income number must be $11,400. And so we can stop. We're happy with that number. The net income would be $11,400. We can also do this with retained earnings account. So we can start with our beginning retained earnings. Our beginning retained earnings is $5,500. Our ending retained earnings is going to be $16,000. That's given. We know that dividends decrease, so it's the same math. We take 16 plus the 900 that was taken out minus the original 5,500. We're just working backwards to calculate net income. So you can do this with the retained earnings statement format or the retained earnings T account, whichever one is good for you. All right, thanks for watching.